As a trader, I started winning at trading once I started to use a top-down analysis. I kid you not, before I started using a top-down analysis, I was honestly lost. I would just only look at the lower time frames pretty much, and I would just take whatever setups presented on the lower time frame without taking the higher context into consideration. By doing this, I struggled to pass eval after eval and burning the very little funded accounts that I had. Ever since I started using top-down analysis properly with the 3 timeframes that I'm about to reveal to you shortly, I was able to earn 6 funded accounts. So without further ado, let's jump right into the video. So when we come to the charts, there's just a plethora of different timeframes that we can actually use. But the 3 key timeframes that I personally like to use are the 1 hour time frame, the 15-minute time frame, and then I love to use the 2-minute time frame for my executions. But first, let's start from the top. And the reason why I like to use 3 of these time frames is because the 1 hour time frame gives me a sense of higher context. Okay, like what is the overall trend doing? What have we been doing for the last couple of days, maybe for the last couple of weeks even? And then the 15-minute really kind of tells me what price action has been doing in the last session, yesterday's session, or even overnight. And then the 2-minute allows me to have sniper entries whenever a setup presents in a certain area of interest. And I'm explaining all of this as we go further along into the video. But the main thing I want you guys to understand is that it's a lot easier to take a trade when you have all of these 3 time frames in alignment with each other. So if we want to take a long, it's a lot easier to take a high probability winning trade if the 1 hour is painting that longs are in play, the 15-minute is painting that longs are in play, and the 2-minute as well is painting that longs are in play. And a good way we can just do this is let's just look at recent price action. We can just see that today is the 14th of May. And then ever since we hit this bottom on the 4th of April, we've just been kind of rallying higher, making higher highs and higher lows. And we can just tell that on the bigger context, we are currently trending higher. We can see that the higher lows and higher highs are being built, and then we clearly have bullish structure. And if we go down to the 15-minute chart, we will be able to see the same exact thing, except with a lot more data candles on the screen. But even if we highlight to what this past week has been doing, we can see, again, bulls are a lot easier to take than shorts because look at these rippers. We just make clear higher highs, higher low, higher high, higher low, rip up again, higher high, higher low, and now we're making higher highs, chopping around. Longs are a lot easier to take rather than trying to fight the trend. So the 1 hour chart is going to tell you basically what side you should be looking at. Should I be looking for longs or shorts? The 15-minute chart is going to tell you if it's the right time to actually take a long or short. The 2-minute chart is going to allow you to find that execution and that nice spot to where you actually want to get into the trade, and it's going to give you the proper confirmation on the lower time frame telling you that, hey, buyers may be ready to step in and this could be a good area for you to step in on. So this is how I like to use the 3 time frames and alignment. Again, I need for all of them to paint the picture that bulls are in play if I'm going to take a long, but vice versa for shorts. If I want to take a short, I need for the 1 hour to show me that we have been trending lower recently for the past couple of days or even weeks. I also need the 15-minute to tell me that we've been trending lower recently for the past couple of days or even overnight session. And then I also need the 2-minute to show me that bears have been in control for the majority of the current trading session that we are trading. So now that you know how to use the 1 hour, 15-minute, and also the 2-minute charts in combination, I want you to try something going forward. I need you to first look at the 1 hour chart and figure out where are good spots for me to go long. Should I go long up here at the highs after we just made a higher high? Or should I wait for price to pull back pretty significantly and then get in long after the higher low is confirmed? So we set that higher low and then price starts moving higher. Well, I beg to differ that, we should actually wait for the actual higher low to be set and then wait for price to tell us that it's actually a set higher low and that we're ready to move higher. We can do this by using one or two things. We can use just by looking at simple price action and seeing, okay, this looks like a nice higher low. And then we start seeing some buying coming in and then buyers start to take over because we just see as sellers were dominant, we majority saw like red candles. But as we're starting to push higher, we're starting to see green candles come in, green candles come in. So this is a good sign to tell me that longs are in play. And it's not too late to get in here. It's also not too late to get in here. It's also not too late to get in here. However long you need to take for your confirmation, do so as long as it's not all the way up here near the recent highs. Because again, that's to me, that's a late entry, right? But even if let's say that's what price action, but let's say if you're a view app trader or even a levels trader, well, wait for price to pull back to your key levels. It can either be the weekly anchored view up that we have here, anchored from last week, or it could be this price level that we have from a recent higher low or higher high. And if as long as you wait for price to pull back to these areas, especially on the 1 hour chart, waiting for this on the 2 minute chart, I mean, there's just way too much data. You first want to start from the 1 hour, see that, okay, we've made a nice higher low at a key level. We made a higher low at the start of week view app and at this price level. And then as we see buyers start to step in and we start seeing the green candles print, we can then go down to the 15-minute chart. And then we likely see the same thing on the 15-minute. Guess how many, as we're pushing down, I mean, we just majority see red candles, red candles, red candles. And then once we start to bounce here off this price level and those starts a week view up, then we start to see more green candles being printed, more green candles being printed. So we have three, a few red candles here. But I want you to notice about I want you to notice something about the red candles is that these wicks down here, especially on the 15-minute chart, tells me that there are buyers stepping in here defending this level. So once we broke out above the start of week view app, we can clearly see that buyers are here defending this level on the 15-minute. So at this point, as soon as I see this, now I have confirmation that we have a higher low in place. We're at a very nice key level. The 1 hour is pending bullish. The 15-minute is pending bullish. Now let's find our execution on the 2-minute chart. And if we want to find our execution on the 2-minute, going back to that exact date, well, we can just look for an entry after we break out above the start to week view app or whatever you're using as an entry signal, and then kind of go in through there. And then you can just, again, take a couple trades here. But inevitably, I mean, the trade does go up and you can just trade from this level to this level. Or you can even target this higher low, get in around this higher low, anywhere around here, and just target the higher high that was made on either the 1 hour, as we're going to see pretty shortly here, right here on the 1 hour, we can target these highs right here, or we can even do the same thing on the 15-minute. Let's say we enter that trade, okay, anywhere around here is fine, like wherever your entry signals are, that's great. And then you can target these highs that we've previously made because just by looking at the 1 hour, those highs are the higher highs that were set in the current uptrend that we're in. So those are some things that you can target, and that's how pretty much you can use the 1 hour and 15-minute and then the 2-minute in combination. Another example is if we actually look at today's price action. So today is now Monday, May the 19th. We're seeing that again. We just made a higher high. I mean, looking at the 1 hour chart, and this is why the higher time frame is so good because it tells you where do you want to get in at? Where should you stay out at? Okay. If a setup on the 2-minute presents anywhere around here, do you really want to take that setup? No, because you're essentially buying the highest price. And at any point, it could just drop. And especially on this day, I know a setup did present and it worked on this day, but can this work consistently? Is it always smart to buy the highest price of the day? No, it's not. So you need to be picky and select your spots on the higher time frame and then wait for your executions to actually present themselves once we are at those areas of interest on the lower time frame. So what I mean by that is, again, going into today's session, I was looking at price action like, okay, yesterday we made a higher high in the general trend. So if I want to get in long, I need to wait until price pulls back and it makes a higher low. So if we're looking at the chart, what are some areas that would be interesting areas for me to wait until price reaches those areas to see if we want to form a higher low? Well, it's previous areas to where buyers stepped in on. Commonly, we see buyers stepping in at the start of week view app. Also, commonly, we also see buyers stepping at these price levels. So I'm going to wait for price to pull back to this level, see if we get some buyers, which we don't. It drops even further. And then my next level is this level. And if this level doesn't hold, I'm then going to look out for this price level where we obviously previously had buyers as well off this higher low that we pretty much just covered. And so this is how I want to read and react to price, especially using the 1 hour chart. Now we have our spots. We understand that we want to look for longs around here, look for some longs around here, and then around here in case price doesn't hold. So then we drop down to the 15-minute to actually wait to see that it's actually ready for buyers to step in. And how are we going to see this? Well, we're going to see this by buyers defending this area, stepping in and kind of forming some wicks, telling us that buyers are actually defending this area. And you could take a trade here. It may be a loser. It may not be, depending on how long you're holding the trade for. But either way, it's a good effort because it's an area to where we understand that buyers likely like to step in. But sadly, they fail. And it's okay because we're traders and we have to accept losses. So now it's on to the next area. What's the next area? Well, it's the starter week view up here. And the difference that I like to point out here is how strong we can see buyers are really kind of like pushing price up here. Here we have a lot of consolidation, a lot of sidewaysness, and sometimes that's pretty good because that tells us the buyers are defending this area. But we need follow through. And because we don't have any follow through around this area, you might want to cut your trade and then just wait for a deeper pullback. And then boom, right here, we consolidate for like maybe 45 minutes, but then we see that follow through. We pull back again, sellers try to take it one more time, but guess what? Buyers defend it, and then we see the follow through. Once we see the follow through, then you can be like, okay, let's get in. Or you can just go ahead and get in at around this key level after you see buyers stepping in for the second time, and then just be willing to cut your trade in case sellers do have the strength to take this level. But that's on the 15-minute. This is going to tell us, okay, buyers may be ready. I think they're ready because we can't wait for a full 1 hour candle, but we can definitely use 15-minute candles just to see where buyers are stepping in. And then obviously we go down further down on the 2-minute. And then around this price level, this is something I kind of pointed on the stream, is that a really good trade you could take going into the New York Open, which is right here at 9:30. You can easily take a very nice and beautiful breakout trade, stops down low on structure. And then the only thing you have above you working against you is this level of resistance, but you can still get a few points off this. So whenever you get around this area, maybe you want to go risk free or even take some cover some profits. But obviously with this, I mean, we just have like endless green or bullish candles in a row. So that can give you the confirmation to just hold on this trade a little longer. But it's really important that we manage this trade well. But again, it's identifying that we want to take longs around this area. And so we just take a long a little bit more extended from the area. But the good thing about this long is that we still have a lot of room, if we're looking at the 15-minute, to hit these highs. We're not buying all the way up here near these highs. We're buying all the way down here. So we have plenty of room from where we're getting in from the likely target, which is the previous day's highs or the higher high of the uptrend. But guys, I mean, it's that simple. That's how I like to use the 1 hour, 15-minute, and 2 minutes all together. So that way I am choosing the correct trade locations and I'm waiting for the proper executions. If you're only looking at the 2-minute chart, bro, you're going to see so many setups present. There may be one here. There may be one here. There may be one here. But you're missing a big piece of the picture. Why do certain setups work? And why does that same setup, maybe at another time or another location within the charts, does not work? And it all has to do with the higher picture, bringing the higher picture, the middle picture, and the smaller picture all together. And so that's what you want to use the time frames for, to understand when should I get in, when is it the right time, and why does this setup have a good chance of working versus if, let's say, we were to see the setup later on in the day. But if you enjoyed this video and you'd like to see more, please check out my content. And if you want 40% off across instant funded accounts or even challenge accounts, I strongly suggest getting an account with Top 1 Futures. And if you use code MANY, you'll get 40% off. But I'll catch you guys in the next video. Peace.